if I remember right, Capital Foods first started talking of a process in February of last year. We got their initial numbers and we ran the entire business cases. You have to realize this fits in perfectly into the platforms that we've defined for ourselves. So from a strategic fit, it's a great fit. Whether it is the pantry platform with the chutney, sauces, the pastas, the noodles, and the paste, or even in the mini meal snacking platform, the soups, the instant noodles, etc. It fits in perfectly from a strategic fit. Financially, we did the numbers. They are in 3.4 lakh outlets. Just as a perspective, my direct reach is 1.5 million.
Yeah.
Numeric reach is 3.8, 3.9 million. So you see at least a 10x multiplier if I can get even to the numeric reach number. So huge runway for growth. Very, very, very strong brands, right? Ching's Secret is almost the undisputed leader in Desi Chinese. Smith & Jones, I think they have not put as much focus as they should have, and therefore it's been what it is. I would think it's again a fantastic fit. So that's one piece. The second thing, you have to also look at it from a brand perspective. Now with these two coming in, I have all the cuisines to appeal to the Indian consumer. The Sampan appeals to the Indian taste. Smith & Jones is Western, and Ching's Secret, I would say, right now it is mostly Desi Chinese, but can probably go Oriental. Right. So I've covered the entire plethora of cuisines that an typical Indian would have, and that plays perfectly. Strategically made sense. Then you sit back and say, if I were to drive X distribution, get to Y volume, etc., you have X amount of whatever, top line and therefore bottom line to be created. And then you say, okay, what am I willing to pay for it on a DCF methodology? We did all the different numbers, and we do think that we've got it at a price which the sellers are happy, but we do think we can create immense amount of value to our shareholders. Now, the other piece I would just want to emphasize is the gross margin in the Capital Foods portfolio is 50 to 55, which is significantly accretive to what I have. Right. So significant area for growth, gross margins being higher. I would think there is still space to optimize trade margins because of their scale difference. Right. Once we integrate it, we would bring optimization to bear.
It implies that this business could be around 17 to 1800 crores in FY26 with a good 400 crores sort of EBITDA. Would that be a fair assessment?
I wouldn't get to the exact numbers, Mangalam, but I can say that we are going to grow aggressively on the top line.
Define aggressive.
Define aggressive is high, strong, double-digit growth, right? And EBITDA would be significantly accretive to our portfolio. So we would see a significant increase in the EBITDA margins for ourselves. I would say significant change in the growth trajectory of TCPL with these brands and EBITDA accretive.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.